You've probably heard it a million times. The stock market is the engine of our economy. But what if that engine is, well, kind of rigged sometimes? Today, we're going to pull back the curtain and look at the market's dark side. We're talking everything from insider trading to massive manipulation schemes. And this isn't just about crazy stories. It's about really understanding the hidden forces that can mess with your money so you can be a smarter investor.
Here's a question that's probably crossed your mind, right? You look at the news, the market's hitting all-time highs. But for a lot of us, the actual economy feels, well, not so great. It's a disconnect, and it's not just in your head. It's a real paradox, and we're going to unpack exactly how that's possible. But to get there, we've got to start with the basics.
All right, so let's break it down. You can think of the market as having two faces. On one hand, you have what it's supposed to do, its ideal purpose. And on the other hand, you have the reality of how it can be twisted and manipulated. Before we dive into the shady stuff, we need to be crystal clear on what the market is supposed to be in the first place.
On paper, it's a beautiful idea, really. It's a win-win. Companies get the cash they need to grow, to innovate, to hire people. And in return, regular folks like you and me get to own a small piece of that success. When the company does well, you do well. It's a system designed to share both the risks and the rewards, powering progress for everyone. That's the dream anyway.
But what happens when it's not a level playing field? What happens when some people are playing with a stacked deck? That brings us to our first big problem, the insider's unfair advantage.
Just imagine for a second. Let's say I came to you and whispered, hey, this company is about to announce something huge that's going to send its stock to the moon. You buy in, make a killing, and get out. Sounds great for you, right? But what about everybody else trading that same stock without that secret tip? Suddenly, the game isn't about smarts or research. It's just about who you know.
And that, my friends, is the textbook definition of insider trading. It's using critical information that the public doesn't have to make a profit. It's not just illegal, it completely shatters the idea of a fair and open market for all of us.
So who exactly is an insider? Well, it could be anyone, really. An employee, a top exec, or even just a friend who gets the tip over dinner. Now, it's not illegal for an executive to trade their own company's stock as long as it's all public. The crime happens when they trade based on a huge piece of news that isn't public yet. But here's the kicker. How do you actually prove a trade was based on a secret chat? It's incredibly tough. And get this for a legal gray area. If you're at a coffee shop and you overhear two CEOs talking, is it illegal to act on that? The answer is maybe not. And that's why this whole problem is so hard to stamp out. And we're not just talking about some small-time tips whispered in a back room. Oh no, this can happen on a massive corporate scale. Let's take a look at a real-world example that involved one of the biggest names on Wall Street. So here's the breakdown of how this whole thing supposedly went down. A company owned by the bank bought up a ton of warehouses that stored aluminum. Then they basically created a fake traffic jam. They started moving the metal from one warehouse to another very, very slowly. This created massive shipping delays and made it seem like there was a shortage of aluminum, which of course drove the price up for everyone, from the company making your soda cans to car manufacturers. And since they controlled the supply, they could bet on the price changes they were creating themselves. So that's one way the game is rigged from the inside, but there's a whole other category of manipulation that's aimed directly at us, the regular investors. This one isn't about secret info. It's about messing with our perception and using our own human psychology against us. I love this analogy because it's so true. Just like fashion, a stock's price often has more to do with hype and what everyone else is doing than the company's actual bottom line. If a stock is hot and everyone is buying, you get that fear of missing out, right? That buzz alone can drive the price sky high, whether the company is actually worth it or not. And of course, there are people who have figured out exactly how to exploit this herd mentality. It's a classic con, and it's called the pump and dump. And you know what? It's still incredibly effective.
Here's the playbook, step by step. First, the scammers buy up a massive amount of a really cheap stock. Step 2, the pump. They launch a huge hype campaign with paid ads, fake news articles, social media influencers, you name it. They're screaming from the rooftops that this is the next big thing. Step 3, as all of us excited investors jump in, the price shoots up. And then, at the very peak of the hype, the scammers dump all of their shares at once, walking away with a massive profit. And what happens next? The stock price crashes, leaving everyone else holding the bag.
Now, here's where it gets really interesting. You can pull the same kind of trick, but in reverse.
Instead of pumping a stock up, you can actually make money from its collapse. This is the evil twin of the pump and dump, and it's called short and distort. Basically, you bet that a stock is going to fail, and then you help it fail by spreading negative rumors.
So let's put them side by side. With a pump and dump, the goal is to drive the price up. You use positive hype and you buy low to sell high. With a short and distort, the goal is the exact opposite. Drive the price down. You use negative hype and you make money when the stock crashes. See, they're two sides of the very same manipulative coin.
And in today's world of social media, man, this is easier than ever. A single rumor on WhatsApp or a post on Twitter can spread like wildfire and cause absolute chaos. This isn't just a theory. Take a look at what happened in 2018 with Infibium Avenues. A single negative message about the company went viral on WhatsApp, and its stock price collapsed by 73% in just a few hours.
And the cost of that one rumor? A staggering 92 billion rupees. Let that sink in. That's how much investor money was just gone, wiped out in a single day. This is the devastating, real-world damage these schemes cause to ordinary people who get caught in the crossfire.
But, the damage isn't always just about money. When the only thing that matters in investing is making a profit, no matter the cost, there are much bigger consequences for society. We have to start looking beyond just the numbers on a screen. Think about it this way. If a company decides to cut corners on safety or pollute a river to boost its profits, what happens? Its stock price might go up. So an investor who's only looking at the bottom line sees a good return and buys in. But what they're really doing, without even realizing it, is rewarding that bad behavior. Our investment dollars have real power, and they can end up pushing companies to put profits ahead of people and the planet. So after hearing all of this, you might be thinking, what are we supposed to do? Just give up? And the answer is no, absolutely not. The answer isn't to stop investing, it's to start investing with your eyes wide open. Okay, rule number 1, and this is the most important rule of all. Never, ever, ever invest with borrowed money. I don't care if it's stocks, crypto, anything. Only invest money you can truly afford to lose. So many financial tragedies start with someone taking out a loan, getting caught in a market crash, and ending up completely ruined. Just don't do it.
And rule number 2, become a conscious investor. Look past the hype and the flashy headlines. Ask yourself, what does this company actually do? Are its products making the world a better place? How does it treat its employees? What's its impact on the environment? These are the questions we should all be asking before we put our money down.
At the end of the day, it's really about a shift in mindset. It can't just be about chasing the biggest, fastest profit. It's about understanding the power we hold as investors and making a choice to support companies that are actually building a better world. The key takeaway is that simple. Think before you invest.
And that leaves us with one final, and I think really powerful question to think about. Every single dollar you invest is like a vote. It's a vote for the kind of future you want to see. So take a second and ask yourself, when I invest my money, what future am I funding?